Thank you. Thank you, Marcel, and thank you everyone for being here. I'll get started right away because I know Marcel is my moderator, and that means 10-minute slot is a 10-minute slot. I want you to take as much away from the session as possible to get you into the next segment, ask smart questions and also critical ones. Briefly, you've probably heard of me, have communicated with me. If you're already part of the DEA community, I'm an executive director at the DEA. We'll leave it at that for now. When preparing for this segment, I was thinking, what do I even include in this? And there were two main themes that I thought were important, namely the measurable ones, so numbers, and then also developments in news. And you'll see, we'll start with the numbers, because the news segment could go on for the rest of this conference day, to be honest with you, if we wanted to. So what happened? Where did we come from? Where are we now? The most notable developments, of course, over the last year are the decrease in total supply, as you can see here. Currently, we're at 122 billion US dollars. So despite the DPEC, we're still we're below the total supply of 2022 levels as of right now. And what you can also see razor sharp very nicely is Terra Luna taking place, so the implosion of 40 billion US dollars last year. Very impressive, I think, to be able to trace that back in those graphs. Then coming to current stablecoin landscapes. What do we have? What has proven to be the way to go, which have prevailed? Well, first of all, you see that exogenous stablecoins, meaning that they're backed by external assets, are the way to go. So because endogenous projects seem to have failed in the past. What does that even mean, right? Let's clarify those terms first. So exogenous is referring to, as I said, stablecoins backed by an external asset. So for example, DAI is backed by ETH. Now, if DAI goes down or depegs, what happens to ETH? Nothing much, right? ETH still exists, doesn't take that big of a hit. However, with endogenous stablecoins, what we see there is that they're backed by a native asset. If you care for an example, look no further than Terra Luna. So what happens to UST if Luna crashes, right? So that's basically your, what was that called? The test that you do to see whether somebody is a security or not. So that's your equivalent there for stable coins. And as I already said, the majority of endogenous stablecoins projects have failed, as we've seen in the past. And of course, also important to note, Frax and USDD are, for example, also backed by other stablecoins. So there's, of course, some contagion effects right there. This one I find a very, very interesting graph. So if you imagine, for example, the overall development of the crypto market over the last couple of years, next or in this graph involved as well, you would not be able to tell where the bear market was, because the way that stablecoins were traded on centralized crypto exchanges doesn't correspond to that. So the amount of stablecoins stored on centralized crypto exchanges have actually increased both in absolute value and also in percentage terms relative to their market cap. Again, basically isolated from what's going on in the bigger picture. Then this one is just a little chuckle. I think this is pretty self-explanatory. So what you see up there, the pink sliver up there, do you see that? That's us, you guys. This is the Euro Tether, H-Euro, so by the Angel Protocol. Of course, back then, Eurok wasn't around, but that's also counting towards that now. So you still don't see an increase since we've got more, also Stasis Euro. I think that speaks for itself. Then, before we get into the notable news, this is also a fun one to look at, the failed stablecoin projects. Since 2022, pretty packed list. The most notable one in terms of damage is, of course, the Iron Finance bank run. And what can we conclude from this? Again, fully decentralized stablecoins are most likely to fail. Fully decentralized ones. Let that sink in. And the top 5 stablecoins as of right now, meaning USDT, USDC, BUSD, DAI, and Frax, The first three, one of that, are issued by a centralized entity. So of course you have decentralization on different dimensions. It's not just the governance and the issuance source. There's more to that, of course. But when it comes to this factor, it's really about the decentralized issuance of stablecoins that has proven to be, I wouldn't say a success factor, but something to take into consideration in risk management when you're setting up your own Euro stablecoin, which I hope all of you are going to do after today, the latest. Then notable also, because I said top 5 stablecoins, the latter two that I named, so DAI and Frax, again, they're backed by USDC. That's important to keep in mind. So backed by a centralized issuing source. All right, notable news. This, if I had more time, I would ask you guys, I would let you speak, because you would be able to throw in so many things. We would kind of see like a mind map of what comes up all the time. There was so much to choose from. I don't need to tell you that. I'll focus on the ones I find most interesting. If you have any others to mention, please do come up to me after. I'd like to discuss and hear your opinion. We've all heard, stablecoins are there to on-ramp, off-ramp fiat money. We've also heard the whole volatility out-smoothing factor, or that's the reason why people are using stablecoins, right? Now we have disaster relief in the mix, of course. This, even though it's only 17%, I think is quite notable. We're talking about nearly $100 million in crypto donations from individuals around the world that was given to the Ukraine in the early days of the Russian invasion. And again, Bitcoin, Ether, and Tether were the most notable donations made, basically. Then, not mentioned here, but also very important, inflation, especially in Latin America. What we see there is that these countries, or some of those countries, have very high levels of inflation, but in reality, this effect is somewhat offset by foreign direct investments. So it's not as noticeable right now. However, for example, China is pulling out a lot of money and not letting as much just FDI happening anymore, meaning that these effects will be more noticeable starting this year. That means two things for the people in Latin America. They'll need a more stable currency option, obviously, and also a secure platform to do more with their money in digital assets in general. So also very, very interesting, paired with lack of trust in the local banking system. Then, the only thing I want you to take away from this slide, because you've heard this, you've seen this everywhere, is that instead of crypto being the risk for the bank, this time it's in reverse. This time, banks are a risk for crypto. And this is an unprecedented situation, and also not something that I find highlighted very much. I feel like Circle's badmouth all the time, and this is my private opinion. This has nothing to do with the fact that Circle's here today or part of the DIA. Then, this guy you might not have seen around. The authorities also haven't seen him around in a while, but he now got arrested, having been a fugitive since the whole UST DPAC happened. Do Kwon, he got arrested March 23rd, so over a week ago. And he actually, not many people know this, but he actually previously led a different failed stablecoin project, also an algorithmic one, that was called Basis Cash, and he used a pseudonym. So that was Rick Sanchez. So just something very interesting. Now he's charged for he has 8 criminal charges against him, by federal prosecutors. The very last thing I want to mention, also very interesting in terms of how stablecoin issuers are, behaving around one another, is that Binance, which is the top centralized exchange by trading volume, has announced that it would delist USD coin and Pax dollar as well as True USD, so some of the biggest stable coins out there, and that it would convert those holdings of its users into BUSD. And that happened in September last year. You can do with that as you may, open to discussions. I hope this gave you a good overview for the next session and section to come at the Digital Euro Conference.